silver hit a 10-year high. Then it crashed, and right now, every investor, every trader, every person who put their savings into this metal is asking the same terrifying question. Is it about to happen again? Beat music drops slightly. Stay right there, because what I'm about to show you in the next 15 minutes could save you or make you a lot of money. Good evening and welcome to Financial Freedom Desk. I'm your host, John Egg. And tonight we are going deep, I mean really deep, into one of the most talked about commodities of 2026. Silver. Now before we go any further, if you are new to this channel, welcome to the family. Hit that subscribe button right now and tap the bell so you never miss an economic breakdown like this one. And if you've been here before, you already know we don't do surface level here. We go where the numbers lead, even when the numbers are uncomfortable. Tonight's question is one that's sitting on the minds of millions of retail investors, hedge fund managers, and everyday people who bought silver hoping for a miracle. The question is simple, but the answer is anything but. Will silver prices drop again in 2026? Let's find out together. To understand where silver is going, we have to understand where it has been. And honestly, the last 3 years of silver have been a roller coaster that nobody fully predicted. Back in 2023, silver was trading comfortably in the $20 to $25 per ounce range. Investors were cautiously optimistic. Industrial demand was rising because of solar panels, electric vehicles, and semiconductor manufacturing, all of which require silver. Demand looked healthy, supply looked stable, everything seemed fine. Then 2024 happened. Silver surged past $30 per ounce for the first time in over a decade, and the financial media went wild. Everyone suddenly became a silver expert overnight. Social media was flooded with videos of people buying silver coins and bars. But here's what a lot of those videos didn't tell you, and this is the part that matters. Every major commodity surge in modern financial history has been followed by a correction. Not maybe, not sometimes. Every single time. The question was never if silver would face downward pressure. The question was always when, how deep, and how long. And that brings us to 2025. Silver began showing significant volatility. It dipped below $28 in certain trading periods, recovered partially, then stumbled again near year-end. The market was nervous. Global economic signals were mixed. And right now, sitting here in early 2026, we are at an absolutely critical inflection point for this metal. So what happens next? Let's break it down from every angle. Here's something that separates silver from gold and makes it one of the most fascinating commodities on the planet. Silver is not just a precious metal. It is an industrial metal, and that dual identity is exactly why forecasting its price is so complicated. Right now, the global push toward green energy is still very much alive. Solar panel manufacturing alone accounts for roughly 15 to 20% of annual silver consumption worldwide. Electric vehicles use silver in their electrical systems. 5G infrastructure expansion requires silver. The semiconductor industry, which is booming right now, is a hungry consumer of silver. So, on the demand side, you would think silver is bulletproof. And in many ways, the industrial demand argument is genuinely strong. So the International Energy Agency has projected that renewable energy infrastructure will continue to scale through 2030 and beyond, and every solar panel placed on a rooftop somewhere in Europe, India, or Texas has silver in it. But here is where the conversation gets complicated, and this is where a lot of analysts get it wrong. Industrial demand tells you about long-term support for silver prices. It doesn't tell you what silver does this quarter or even this year. You can have incredible long-term industrial demand and still see the price drop 20% in a 12-month window. Why? Because price in the short term is driven by something else entirely. It's driven by sentiment, by macroeconomics, by the dollar. And right now, all three of those forces are pointing in directions that silver investors should be paying very close attention to. Let me be very clear about something that doesn't get explained properly in most financial content. Silver and the US dollar have an inverse relationship. When the dollar strengthens, silver prices typically fall. When the dollar weakens, silver prices typically rise. But this isn't a theory, this is decades of market data. Now in 2026, the Federal Reserve's position on interest rates is one of the most important variables in this entire equation. If the Fed continues to hold rates at elevated levels or signals further tightening, the dollar strengthens. A stronger dollar makes dollar-denominated commodities like silver more expensive for foreign buyers, which reduces global demand, which puts downward pressure on price. On the other hand, if the Fed begins cutting rates, which many economists are actually projecting could happen later in 2026, the dollar would weaken and silver would likely benefit. Here's the uncomfortable truth, though. Rate cut timelines have been pushed back before. The Fed has surprised markets multiple times in the past 3 years, and every time a rate cut that markets were pricing in got delayed, commodity prices took a hit. Silver was not immune to that pattern. So when people ask me, John, is silver going to drop in 2026? Part of my answer is it depends on what the Fed does in the next 6 months. And if you are a silver investor and you are not watching Federal Reserve communication and the monthly CPI numbers, you are flying blind. There's another dimension to this story that doesn't get enough airtime on financial channels, and that is geopolitics. Silver, like gold, has a safe haven appeal when global tension rises, military conflict, trade war escalation, political instability, investors run toward hard assets, silver benefits. Right now in 2026, the geopolitical landscape is arguably the most uncertain it has been in 2 decades. Ongoing conflicts, shifting alliances, trade policy tensions between major economies, all of this creates background noise. That keeps some floor under precious metal prices. But here's the nuance. Safe haven, demand for silver, is secondary to gold. When real fear enters the market, the first flight is to gold. Silver benefits, but it benefits less consistently and with more volatility. So while geopolitics can provide support, it is not enough on its own to prevent a silver price correction if other economic forces are working against it. This is the 360-degree picture I want you to hold in your mind. Industrial demand is bullish long term. The dollar and rate environment is uncertain and potentially bearish in the short term. And geopolitics provides some support, but not a guaranteed floor. All three of these things are true at the same time. Welcome to commodities investing. Let me now give you the honest bearish case, because if I only told you the bullish story, I wouldn't be doing my job. There are several credible reasons why silver could see another significant price drop in 2026. First, if global economic growth slows materially, and there are real signs that China's economy, which is a massive consumer of industrial silver, is not recovering at the pace many hoped, then industrial demand projections need to be revised downward. Slower industrial activity means less silver consumption, which softens prices. Second, speculative positioning. A significant portion of silver's price surge in 2024 was driven not by physical demand, but by speculative trading in the futures market. When speculators unwind those positions, and they will, eventually the price correction can be sharp and fast. Retail investors who bought near the top of that speculative run are the ones who feel that pain the hardest. Third, mining supply is not static. When silver prices rise sharply, mining companies invest in new production. That new supply doesn't hit the market immediately, but when it does, often 12 to 24 months after the investment decision, it adds selling pressure. Some analysts believe we are approaching a period where new mining supply could exceed near-term demand growth, which is structurally bearish. Fourth and finally, investor psychology. Silver investors are notoriously sentiment-driven. One bad inflation report, one hawkish Fed comment, one piece of negative industrial news from China, any of these things can trigger a wave of selling that feeds on itself. If you've watched the silver market for any length of time, you know exactly what I'm talking about. Now let's give the bulls their fair hearing, because the case for silver holding, or even climbing, in 2026 is not without merit. The physical silver market has actually shown consistent supply deficits for multiple years running. That means the world is consuming more silver than it is mining. Supply deficits over time are bullish for price. This isn't speculation, it's basic supply and demand economics, and it is a structural support that doesn't disappear overnight. The green energy transition is accelerating, not decelerating. Global solar installation targets for 2026 and 2027 are enormous, and the silver intensity per panel, while being engineered down slightly over time, remains significant. This is real, tangible, physical demand. Central banks around the world, not just the Fed, are navigating an environment where currency debasement concerns are real. Countries are diversifying reserves. Hard assets have a place in that conversation. And perhaps most importantly, for price in 2026, if the Federal Reserve pivots toward rate cuts, even modestly, the dollar will soften, and silver will be one of the direct beneficiaries of that softening. The upside scenario is not imaginary. It is entirely plausible. So where does all of this leave us? Let me give you my honest assessment as someone who has been tracking this market for years. I believe silver in 2026 is in a zone of genuine uncertainty, which is actually more dangerous for unprepared investors than a clear bear or bull market. In a zone of uncertainty, the investors who get hurt the worst are the ones who make binary bets, all in or all out, based on emotion rather than a framework. Here's what I would be watching closely if I were managing silver exposure right now. I would watch every Federal Reserve meeting and every CPI print like my financial life depended on it. Because the rate trajectory is the single biggest swing factor for silver this year, I would watch China's manufacturing data monthly, because industrial demand from Asia is not optional for a sustained silver bull market. It is required. I would watch the silver to gold ratio, because historically, when silver is undervalued relative to gold, it tends to outperform on the next leg up. And I would watch physical ETF flows, because when institutional money moves into physical silver, it tells you something that speculative futures positioning doesn't. What I would not do is panic sell based on short-term volatility, and I would not go all in based on a social media hype cycle. Both of those impulses have destroyed more silver investors' portfolios than any market crash ever has. Here's the bottom line, and I want you to really sit with this. Silver is not a simple asset. It never has been. It sits at the intersection of monetary policy, industrial economics, geopolitical risk, and market psychology. Anyone who tells you with absolute certainty that silver is going to $50 this year, or that it's going to collapse to $15, but be very skeptical of that certainty. The honest answer, grounded in data, is that the path forward for silver in 2026 depends on a series of interconnected variables, and the smartest thing any investor can do is stay informed, stay disciplined, and never let excitement or fear make their financial decisions for them. That is what Financial Freedom Desk is here for. Not to tell you what you want to hear, to tell you what you need to hear. Backed by research, broken down clearly without the noise. Now I want to hear from you. Scroll down to the comments right now and tell me, are you bullish or bearish on silver in 2026? Drop your number. What do you think silver ends the year at? I read every comment on this channel, and I want to see where this community stands. Your perspective matters, and sometimes the comment section on this channel generates better analysis than some financial news networks. I mean that. And if this breakdown gave you value, if you learned something, if it changed how you're thinking about your portfolio, please share this video with someone who needs to hear it. A friend, a family member, someone you know who is holding silver right now and feeling uncertain. Sharing this takes 5 seconds, and it could genuinely make a difference in someone's financial decisions. If you haven't subscribed yet, do it now. We cover everything from commodities to currency markets to macroeconomic policy, and we do it in a way that respects your intelligence and your time. I'm John Ag. This has been Financial Freedom Desk. Stay sharp, stay disciplined, and I'll see you in the next one.